Welcome to the Beat the Banks podcast. I'm your host, Kyle Fuller, and I've got the one and only David Zapata back in the office today. And we're going to have a conversation about why would someone want to become the banker in their life? I think when a lot of people first hear that, it sounds very foreign, right? Because when we think of a bank in the traditional sense, we probably vision, Bank of America, Chase, Wells Fargo, big building on the corner, lots and lots of money and capital has to go into owning an actual bank. So I think when people hear, would you like to become your own banker? They're thinking, well, I don't have $20 million. I don't have 10 years to wait. I don't have a bank charter. I don't have all the connections in the world. So the idea of banking is never even on someone's radar. Whereas if you look at like the cash flow quadrant, very easy to start a self-employed, job, a business, get into investing. But if you think about banking, I think it's such a large conversation that a lot of people shy away from it, and they just think it's totally foreign. I could never do that. So let's break this down, David, because we are both now heavily in the banking business.
I just want to make a clarification. When you say that I'm in the office today, I just want to make sure that you all know I'm working every day very hard. I'm here. I'm a banker every day. So don't get misled with that idea that I only show up to work once a month. No, thank you for having me. This is awesome. I love this conversation. It's for you and I, one of our favorite conversations to bring out to people because it seems like such a nuanced concept, right? Oh, this is so new. Why would I even want to get into this? But in the back of my mind, I'm always in quiet thinking, you already engage in this. You already have this happening to you. We all do. The default is to have a third party play that role in our life because they have a big building in every corner of the city, which is convenient, seems safe. It's approved by the powers that be, right? And those people are benefiting, taking advantage of playing that role in your life because they control the flow of money in your life, in your business, for your family.
So when you say benefiting from that, let's go deeper into that, because I think when you talk to other people about banking, most people inherently know banks are some of the wealthiest companies in the world, like easily. Yep. Most people would just automatically assume that. Oh yeah, for sure. Look at the buildings they have, the real estate they own. You fly into any major downtown area, who's got the biggest building downtown? It's always a bank.
Yeah.
They're phenomenal masters at the money game. And so how much are they really benefiting from the American public?
Incredibly low. They're profiting is what I should say.
And I think you can't even fathom how much it is. Yeah. We've got some slides that we teach in wealth seminars, on our courses on our website that really go into depth, because all a bank really does is buy and sell money, right? Mm-hmm. So we've been programmed to store our savings with a commercial bank. And why? That's just what we've been told to do. So the banks receive all of these deposits, and they do give you something for those deposits. It's just not a whole lot. They offer you some liquidity, some safety. I'm going to use quotation marks. And the rate of return you're getting inside your savings vehicle is extremely low. Yeah. Now, what does the bank do with that money? Do they let it sit? No, they put it into motion. They loan it out. So if you think about that contrast, how much are the banks making off that spread of money? Money flows in, they pay you very little for it, and then they basically sell the money to someone else at 5% for a vehicle, 6% for a mortgage, whatever it is, 22% for a credit card. That spread is the difference they're getting on every one of our transactions.
Yes.
Isn't that crazy?
It's incredible. And in our foundations course, I think we did this week again to a group of our clients, but we teach, examples of this to make it relatable to people. And the problem is that the numbers have B's and T's, billions and trillions. So it gets really out of hand to understand the scale of it. But we have this popular slide where we talk about one of these commercial banks, one of the big amigos, the four amigos that I call the top four banks in the country, holding at this year, in this particular year, almost $900 billion in deposits from depositors. And from that $900 billion, they paid $3 billion to depositors for the ability to keep their money. But they make $50 billion on the turnaround just on fees, not even putting the money on motion yet, just collecting late fees, overdraft fees, all the fees they like to tag into. And when I presented this in the past, I could see that it just went over people's heads because the billions, it's not hard to relate. So I've transformed this into making it more accessible to people. And the example that I just described is equal to asking Kyle, send me $100,000 today. Would you send me $100,000 today if I was willing to pay you $340 at the end of the year? and I get to make $5,500 on a quiet business with no risk that I do nothing for.
Right. That spread is relatable. I'm going to get $340. You're going to get $5,500. And all you're doing is holding my money.
And that's the key point that I like to make. And that's not even, the spread is not even, that used to distract me. I would always go back to this. The point that matters the most is that I would be holding the $100,000 that are yours in my control.
Right.
The $900 billion. Guess what? That $900 billion in deposits in 2023 for that bank is over $2 trillion. The number keeps growing and accelerating. It's incredible. Some of these banks, I mean, my favorite bank, of course, of all, Chase, not right or wrong, but they are way past the $3 trillion of assets. They have $2.4 trillion with a T in deposits for Americans. The amount of control that you can consolidate when you have control over that amount of money is huge over the population.
It is. And it's why we should be anxiously engaged in educating ourselves about banking. There is a player in the money game that is just looming in the background. And we've been so focused, not that it's wrong, but we always want to encourage people to think. And so we tend to think in, I'm an employee, I'm self-employed, I own a business, or I'm an investor. But the reality is all four of those elements need the banker in their life.
Yes.
And it's such a quiet thing looming out there, which is why we never really hear about it. Because the reality is they don't really want you to know this, because once you know this mindset, you can start doing this for yourself. And as soon as that happens, Bank of America, Chase, Wells Fargo, they all lose potential customers for life. And when you own that function in your life, it is millions of dollars just in vehicles for a family or for a business, let alone investments and everything else. So I want to go back to a couple of the definitions we've chatted about earlier in our podcast. So most people think I've got to invest to win the money game. And that is absolutely correct. I would agree with that 100%. Now, our definition of investing, it's a verb, intentionally separating your control of money with the expectation that additional money returns in the future. So that is what investing is. You have a deal, you're going to separate the control of your money, put it in the deal, and the deal should return with more money. Good investors are very good at that and mitigating that risk. Now, banking is literally the exact opposite conversation. It's still a verb. Intentionally keeping your flow of money permanently in an environment where you have complete control and accessibility. So if you think about that, the bankers want to be in that position for all the business owners, all the investors, all the employees, all the self-employed people. And we've been taught to just rent that function. Just go to Chase, just go to B of A. Your cash flow, your income flows right to the bank. And as soon as it hits their accounts, they lend it out to other people who need loans for their business, for their investments, for their daily lives. They are controlling that flow of money. And that piece is rarely talked about in the money game. But it is so big, it affects all four of those areas. Like most people can never comprehend. Wouldn't that be a function you should start learning about so that hopefully in the future, you could own that function too? You could be the business owner, the investor, but also the banker who's controlling that flow of money for all of those transactions. Wouldn't that keep more money in your life?
Absolutely. I mean, we've talked about this quote again from Buffett, but the best way to mitigate risk is to think. And I am convinced that no one's coming to tell you or educate you in any of these things unless you decide to take a step to think, to go and seek the information. I do this often with clients. I've done this hundreds of times, so hopefully it's relatable. But just close your eyes and imagine the lobby of whatever local bank you use, regional bank, commercial bank, it doesn't matter. And when you walk into that lobby, I guarantee you there's an area where there's a couple of chairs, brochures, and in between the ball of suckers that they always put there, which I don't understand why, there's two sides to that ball, right? In the left side, you'll see all the flyers, all the information to be the borrower. Oh, we'll love to give you a mortgage, a car loan. We'll love to give you a credit card, a personal loan, et cetera, et cetera, et cetera. And to the right, they'll have all the saver pamphlets. Oh, you want a checking account, a savings account, a CD. We have mutual fund. We have all those things. Where do they keep the flyers? Where do they print those flyers? Where they teach you, hey, would you like to learn how us, the bank, keep our profits, manage our profits, how we become so good at the money game, how we become so good at managing our inventory, which is dollars. No bank is coming to teach you that because that's not their obligation. Their purpose is actually to play that role for you. They don't want to get out of that game, so they're not going to come teaching you. This is why we at Factum, why Kyle and I are so passionate to say, wake up, take a look at it. This is ever present in your life. And if you consider that this journey is worthy for your family or business and you start engaging in it, you'll see that, like Nelson says in his book, you should be in two businesses, whatever business you earn your income through and the business of banking.
Absolutely. And I wanted to touch on two things you just said. So they're encouraging us to save and they're encouraging us to borrow. Now, here's the crazy thing about banks too. Do banks lend their own money? No. Isn't that fascinating? They lend the money someone else left there. So my family, my business, leaves some money at the bank. David's family or David's business comes by and you need a business loan or you need a vehicle or whatever it is, so you come borrow it. Most likely they're lending you my deposits that are there and they're charging you interest. That cash flow comes back to them. It's a higher rate of return than what they are paying me to keep my deposits there. That spread can be happening for every one of us if we would just move into that position and own the banking function. But they're not even lending their own money. They're lending our money. All the banks do is buy and sell money. But the return and the benefit they give us is so minimal. I think if people started to really watch that, they would start to shift where they save their money. Because here's the other frustrating part that I learned is with all this money that banks make, because they are some of the wealthiest in the world because they understand this flow. Like, think about how wonderful of a business model that is. All they do is encourage people to come direct their deposits automatically into their accounts. I get paid, yay, direct deposit right into Chase.
Yes.
And then Chase lends that out. They pay me 0.05% and they go lend it out at 8%. That spread is unbelievable. It's not even their money. What are they really doing? They're just holding it, keeping it safe, keeping it liquid. Well, there are other assets that do that, like whole life insurance, that hold it, keep it liquid, keep it safe, that have way more benefit than a checking or savings account. And when I really started diving into this, and this is why we'd encourage everyone to go read the book, The Pirates of Manhattan by Barry Dyke, because as far as I'm concerned, he's done more research and investigation into who's really buying whole life insurance and why. And when you get to the bottom of it, you realize these big banks are also some of the largest, if not the largest, purchasers of whole life insurance in the world.
Yeah.
Isn't that something? With all this money the banks are making off of us, many of them do not keep their savings with other banks. That should really stop and make you think. They keep their savings in something called Tier 1 capital, which whole life insurance qualifies as that capital. Now, it has to meet a certain characteristic, right? It's got to have some liquidity, guarantees. And so the reason the banks love the whole life is because they understand the economic benefits they get from keeping their money with life insurance companies. Some of those are they get professional money management. Does anyone have a better track record than these big mutual companies? No. They've been around forever. Tax deferral, unmatched stability, high non-correlated returns, that means not attached to the stock market, improvements to their income statement, and unsurpassed liquidity. Well, geez, that sounds like those 8 benefits we describe of what we get as a consumer when we park our savings with whole life insurance.
This is fascinating, like contrasting the uncommon description, because it is uncommon for most people to hear these words, uncorrelated to other asset classes. How important would that be for a bank, Kyle? How important would it be to have professional money managers? Aren't they professional money managers? Why do they need professional money managers? Like, they are describing this as a place where they feel like their profits and their savings could live in a positive environment. They're talking about environment, right? When we invite you to consider that infinite banking whole life insurance policy could be a way to have a saving strategy and the proper environment for your savings, that can be the solution for society's issues that we've identified. That's what we mean. We are aligning our point of view with the best risk pricing entities in the world, the banks. And one thing that I want to address as we get into this, because I can imagine happening for some listeners, you may be thinking, well, it is more complex than that. Oh, Kyle, David, no, it is more complex. There's fractional banking, there's commercial banks versus investment. We understand that there's a lot more sophistication to this conversation, but the reason that we intentionally keep it at this principle of the activity of banking as a verb and not all the complication of the infrastructure is because people need to realize that regardless of how complex it is happening, and doing something about it is critical.
Yeah.
So I love when you shared that with me, because you were the person that introduced me to that letter, to that book. It changed my complete mind about, wow, this is something that I really need to start considering getting into as a business. And I just want to bring up that idea that that Nelson talked about in the book. We are not necessarily talking about getting a bank charter. I'm not suggesting that you need to accumulate $20 million and have a really long time to apply for a bank license and a bank charter and all that. We are talking about taking a step back in your family and your businesses and identifying opportunities to do cogeneration. What instruments in our current economy have the ability to allow you to practice the process, implement the rules of banking, so you can start taking advantage of that role in your life?
Absolutely. And it's, we're big on mentorship here at Factum and systems and models. And so whenever I'm looking to go do something, you can always go figure it out on your own. But I would probably encourage people to just slow down a little bit and look for a system or model to follow first. And so when we started our banking systems, David, we just kind of looked at the banks as our model. What are they doing? Deposits come in, they loan money out, but they never loan money out unless it's going to return with more money. They wouldn't be in banking business very long if they weren't doing that. So there are some rules to this. Also, with the profits they're making, where are they keeping their profits and savings? In commercial bank accounts or life insurance contracts. So we do the same thing. So when you look at the system and model, it's like everything's there for you. We just didn't participate in it because it wasn't even on our radar. I don't think it's a coincidence that it's not on our radar. Someone out there really wants to play this role in your life because it makes them a ton of money. And this is why I love what Nelson Nash said in his book, Becoming Your Own Banker. He identified what he calls the problem. And when we're teaching this concept, this is the first place we go. You will get so confused by the numbers, rates of return, if you do not understand this problem up front. And he said you finance everything in life. We're going to repeat this a lot on this podcast, but you either borrow money and pay interest, or you use your own money and give up interest you could have earned. But the problem is all these items are financed by someone else's bank. So let's go deep into this. So I think most people traditionally understand that if I go borrow money from a bank to finance, let's say, a vehicle, a very relatable item for people.
Yeah.
If I am financing that, I'm going to pay some interest, correct? Where does that interest go?
To the person that owned the financing.
Most likely the bank, right?
Yep.
So what do we do as the American public? We say, well, let's get smart. We don't want to pay anyone interest, so save up and use your cash. That's what I was taught, and that's what I did for my very first car. And why did I do it? The only reason I did it is because that's what my dad taught me to do, and that's what his dad taught him to do. But no one had taught me about this problem. You see, even though I paid cash, did I eliminate an interest payment? Yes, right? There was no payment to a bank, but I lost the interest cost, which is what that money could have earned me. But see, the difference is the banker still got the money either way, because when I paid cash for the vehicle, I gave it to the individual. I got the car. What's the first thing he did with that money?
Deposit it in a bank.
Deposit it to the bank. See, they don't even care because they're in that position where it's going to come in through interest or it's going to come in through deposits. They are in the prime position for the money game. All the business owners, investors, employees, self-employed people, all of those deposits, interest, everything flows right through someone else's bank. So wouldn't it be smart, David, to start thinking like a bank, start creating that atmosphere and that environment for yourself, and making sure that more of those dollars in your life that are flowing to and from you are going through your own private banking system?
Yeah. This makes me think of Dalio's How the Economic Machine Works. If you haven't seen that video on YouTube, it's fascinating. But he proposes that, someone's income, someone's expenses is somebody else's income. But the part that is not discussed
Say that
there,
again.
Somebody's expenses is someone else's income, right? You just described that. When I spend my cash to finance a purchase, and I'm financing, you might not call it that because you're using cash. You think it's just there. You're financing because you're giving up the interest that you could have earned with that money. By the way, when you purchase those cars with cash, is that interest cost still alive today?
It'll be with me every day for the rest of my life. Those
Forever.
dollars I use for that car are gone forever.
Yeah. And in plain English, you might think you're paying $20,000 for a car. I would tell you that that car is costing you a lot more than $20,000 when you calculate the future interest you could have earned. But going back to Dalio, he talks about this idea of somebody's expenses is someone else's income. And it's fascinating because when you insert the banking idea in that framework, the part that is interesting is regardless of how the money is moving between expenses and income, the environment to deposit to warehouse that money is usually controlled by the banks, by a third party. And all we're saying is if we cannot help but live in an economy where we have to transfer payments to acquire the goods we want or accumulate the value we want through our income, we might want to be intentional about where we have that value stored and how much control we have over that, because the banks are loving that people are asleep at the wheel.
I could not agree more. They don't just love it. I mean, I think they really, really love it. Think about it. Like, are banks running out there trying to find deals as investors?
I doubt it. They have
the deals
best deal
come
flow.
to them.
Yeah.
It's like, imagine that. Imagine having all the deposits just automatically come to you. And why does that happen? Because that's just what we've been told to do. They're giving us as little benefit as possible to leave as much of our cash in that bank as possible. And then, is there ever a shortage of borrowers?
No.
Never, because there's never a shortage of opportunity. Business owners, investors, people that are growing their families, we need things, so people go and finance them. There's never, ever going to run out of a supply of borrowers.
Yeah.
And all the bankers, they're just sitting there in that position of capital, that role of banker, and the deals come to them. Imagine just sitting in your office and deal after deal comes in, and all you're doing is saying 7%, 8%, 12%. Oh, you have no credit, 15%. Like, that's all they're doing. But the money they're doing it with is not even theirs, David. It's ours.
Yes.
And do they say, David, thank you for leaving so much money on deposit with us. We loaned it out and we made 1,500% this year. We'd like to give you some of that. No, what do they say? Thank you for opening a checking account. Here's a sucker. Because that's exactly what you are,
and go
right?
home.
That's
Absolutely.
every time I see that bull that you described earlier, that's what I think of. I'm like, I think they're intentionally putting that out there because they know, like, y'all are suckers for keeping your money here while we're loaning it out, making billions, thousands of % interest every year.
Absolutely. Absolutely.
That gets me fired up.
Oh yeah.
I hate that, actually.
I just had that thought 2 days ago, walking into the bank and looking at the ball and then looking at the teller. Is like, this is incredible. Yeah. What you're saying gave me another idea. I want to bring Nelson back into the conversation because this was a really powerful idea to me at the beginning of my journey and thinking about banking and thinking about money in general. Nelson talks about only one pool of money in the world, and he makes the analogy of only one pool of water, right? So our planet is majority of water, and although we may call them rivers, oceans, rain, tears, the water we drink, the reality is there's only one pool, and it's flowing through all of us. And with money, it's interesting because the idea is also true. We may call it dollars, rupees, yuan, you may call it whatever, but really there's only one flow. And he introduces that idea and also poses the question, if all the money in the world would be redistributed through the population equally, it would not take too long for that money to be within the control of the top 3% that would tell the rules for the rest of the 97% of the population. And it's a dark thought.
It is.
It's scary, right? Because regardless of the 3 or 97%, a lot of people suffer in that type of distribution, that type of arrangement. And that really got me fired up. What if we can teach people to at least have the ability to control the need for finance by controlling a portion of that pool in their ownership? That to me is at the core of American values of self-reliance, stewardship, like things that I love as an American for our culture. So I know that idea had an impact on me, but I'm curious, when you read that, when you heard that, what came to mind? Because it is really surprising. You know, if you think about it, 3% of the interest in our country probably control, again, I just said, $2.4 trillion of deposits in Chase, just one bank.
Yeah.
I mean,
I think the more you take a step back, and Nelson always says this in his book, if you just take a step back and look at what's going on, you'll know exactly what to do. Yeah. What a profound statement, right?
Yes.
Because I think the more I've dived into this, and The Pirates of Manhattan, I think, was the second book I was encouraged to read after becoming your own banker. And this really irritated me because I've been looking for a long time. I always felt like something was fundamentally wrong with our financial system. And it wasn't until I was introduced to that book by an orthodontist and then read The Pirates of Manhattan that I started to get very frustrated because I knew it was true. If you really take a step back and look at it, we've talked about the employees, self-employed, business owners, and investors. All of us are so focused on that. Not that any of those are bad, but the people who control all that flow of money continually, forever, they've got way more cash than all the business owners and investors. Mm-hmm. Why are we not trying to own a piece of that for our lives? And what you said about American values, the independence, the self-reliance, the control, the certainty, the peace of mind that brings into your family or your business is unrivaled.
Yeah.
If you can understand that principle of banking. And it's also why I know banks don't want us having this conversation. They can't stop it from happening. People are starting to wake up. We're starting to think. But as soon as we understand this, and you can do this for your own family or your business, that bank loses a potential cash flow source for life. And it's millions of dollars for them.
Yeah.
And so when you talk about redistributing that wealth, the people who understand that flow of money for all the transactions, that's who I would want to be in that scenario.
Yeah. Yeah. One more thought to that, because I think, again, we're talking about a worthy ideal with this conversation, right? Like, you and I have big goals. We'd like 8-figure loan portfolios and things like that. You and I have talked about this, right? We really love the business of banking. But in comparison to the banks, that's pennies in a bucket, right? That's invisible, right? So we're not trying to say that what we're doing is transforming the world individually.
Right.
But I do think it's a worthy ideal to change the consciousness of Americans about this, because in the aggregate, we do have the power to influence the conversation, recapture control, find those values of independence in our business, in our families, so we don't repeat the thousands or millions of business closures that we had during COVID because of the lack of liquidity or the lack of control over their phones. So what we're talking about is not something that is pie in the sky. It's very real. It just happened a couple of years ago. And guess what? It's going to continue to happen. One more thing for whoever is listening, because you said it really quick, and I don't think most people that are not familiar with this would catch it. When you talk about tier one capital, you're talking about what the banks call pristine collateral, highest quality collateral they have. And the people creating that definition are the regulators, the Fed.
Mm-hmm.
So the Fed is telling commercial banks that in that tier one capital, they need to keep a certain amount of reserves to compare against the risk they're carrying in other investments. So they're comparing this tier one capital to things like derivatives, CDOs, like all these risky products. They have tons of millions, billions of dollars with this very high quality, safe collateral. And in there, they're not saying, they're saying, well, the coins and dollars that are probably minimal that you have in your vaults is super safe. The gold bars you have, like things that are very quite pristine, right? The treasury bills, super high quality, right? Your reserves at the Fed, high collateral, tier one capital. Guess what is in there, Kyle? Bank-owned life insurance cash values.
Boldly.
They are saying that at the highest quality of collateral, this asset class that we are suggesting you should consider looking more into is comparable to the gold bars they have hidden on vaults, if they have any.
Isn't that fascinating?
It's fascinating. And people keep saying, oh, low rates of return, is expensive to own, the worst invest. Sure. Go to the FDIC website, pull a commercial bank, and go look through their liability statements and look for life insurance cash values. You will be surprised to see that Chase has billions of dollars, that Citi has billions of dollars, Bank of America, Wells Fargo, they have billions of dollars in this asset class, which was the asset class that they didn't lose a penny during the last financial crisis.
And they won't lose a penny again going into another recession. So just to give you some reference points, Bank of America has got about $24 billion of cash value. So not death benefit, cash value in their tier one capital. Wells Fargo running at about 20 billion, Chase 12, Citi 5 billion. These banks have a lot of cash stored there.
Yeah.
And if they're great at the money game, I mean, I'm not that smart, right? I got 8 credits at a community college. I wouldn't say I'm like super educated, but I can look for a system and a model or a mentor. And if I look at the best players in the money game, which are banks, and I say, why are they keeping so much cash there? I'm going to go look a little bit deeper and say, maybe they know something we don't know, David.
Yeah.
And I'm going to follow that pattern, which is exactly what we've done. And so I want to give everyone just a real life example before we end this episode. We're talking about why would you want to own the banking function in your life? Because it solves a number of problems for you. But more importantly, it's going to generate a lot of cash flow for you. And cash flow is the number one rule of winning the money game. But middle America has been so confused to focus on things that are good. I would just say they're not great. Accumulation. Mm-hmm. It's good. I wouldn't say it's great, though. We believe in creating abundance in the 5 areas of life. And the only thing that does that is unlocking more cash flow or income in your life.
Yeah.
Now, banks are masters at that, but they want you to save away for a long period of time, store up that money so they can use it. Why are we not doing the same thing for ourselves to create cash flow? So this is why I love the idea of becoming your own banker, but really extending it to your business or your family. Let me give you an example. So our kids, David, will all need vehicles. Is that correct?
Yes.
So they have two options. They're either going to pay cash or they're going to finance it using someone else's bank. Either way, all of those dollars transfer away from the family, or you can relate this to your business. But if you spent some time, a few years, saving up money in a different savings environment to create your own private banking system, now could your children come to you or I when they're ready and they say, I need a vehicle. And you say, great, we got a family banking system. Here's the interest rate. You're going to pay it back. Now, we're coaching our kids early on this. Why would they want to pay you and I interest, even if they could go pay cash? Because those payments coming in, is that not cash flow for you and Sarah?
Absolutely.
Diane and I?
Yep.
And we're going to get that for our whole life. Now, the average American will spend about $400,000 driving 13 vehicles in their lifetime. All of that money is gone forever unless you have a private banking system. So that's $400,000 in just payments for our children that they will need in their lifetime. Now, you put that through a more efficient savings environment, like a whole life policy, you're going to have well over $1 million of growth in that as well, right? Plus all the other benefits you get from whole life. Now, those payments that our kids are making, it's all cash flow for us now. So I got 3 boys. That's $1.2 million in just principal and interest payments, let alone the growth. If those kids get married, double that. Why are we out there hunting for all these deals when the cash flow is sitting right in front of us? This is happening in your business. It's happening in your family. It's happening in your life. And the cool part is when we pass away, what happens at the end of a life insurance contract? There's a death benefit. So all those payments that our kids will make into our private family banking systems will be returned to them times 10. So I want you to contrast this. Why do you need your own private banking system? Well, imagine if Chase Bank said, hey, we're running a special right now. Any dollar that you borrow from us right now, we will pay you back $10 40 years from now. What? And we'll sign a contract guaranteed. I would use that bank for everything I did.
We do.
We do, right? Because we understand this. We've been doing this almost 10 years now. And so when you think about that, that's just vehicles. What else can you finance? Mortgages, college educations, investment opportunities. Is there any end to it? No, which is why we know Nelson called this the infinite banking concept. Isn't that profound?
Just one more comment to what you said to relate it back to the beginning of the podcast. Maybe, and I'm not trying to be cheeky here, like maybe the banks, when they have $200+ billion in cash values as a whole industry, they're not so concerned about the return on capital, but death benefits associated to that are in the trillions with a T, and they're concerned about return off capital.
Right.
I'm just going to leave it there. Banks are doing this at a massive scale, and you just related that same principle to the you and me level as we're doing for our families.
I love it. And this is why we love this concept. So whether you are an employee, you're self-employed, you own a business, or you're an investor, start thinking about why you should also be the banker in your life. And this is one of the ways that you can beat the banks, hence our slogan, right? The banks are necessary for a certain degree, but they should not be profiting, in my opinion, as much as they do off of our hard work, everything we're doing. I think there's better win-win options out there for more Americans by teaming up with strong mutually owned life insurance carriers versus a commercial bank for their primary savings environments.
I couldn't agree more.
And so hopefully you enjoyed today's episode. Make sure to like and subscribe, and also reach out. Go on our website, factumfinancial.com. We have an entire video series where you can go through all of these conversations, but see all the numbers behind it as well.